In the energy quadrant today, crude oil gapped higher, opening up about 66.85 in the September contract, or 37 cents higher than last night's settlement, which was about 66.48. 68.90 was the high today. That was up 3.64%. We gave a little bit of it back, finishing the day right around 68.44, up just short of 3%. On the lows today, we were still 12 basis points higher than yesterday's closing price. 66.56 was the low. Now, today was not enough of a move to change the trajectory of crude oil in the short term, which has been down only 1 week in the last 3, but 3 weeks out of the last 5 and 5 of the last 7 sessions. So overall, crude oil still looking a little bit weak despite today's pretty impressive rally. China demand is part of the reason for this weakness, or I should say the fear of slowing China demand. Analysis by a Shanghai-based commodity researcher, ICIS China's Sinopec, which concluded China's largest refinery is expected to reduce refinery runs by up to 10% in the midst of the new travel restrictions in China. So that's part of where this fear is coming from and extending into the early overnight session. But the infrastructure plan, the expectation of it being passed, which did happen earlier today in the Senate, $1 trillion bipartisan infrastructure plan passed today, and that's likely driving all the industrial commodities higher. Crude oil fits into that basket. The legislation includes $550 billion in new funding for transportation, broadband, and utilities. That will need physical building, which will need carbon fuels, in the short term at least, to drive that building. And that's likely a good sort of a tailwind for the theme of a commodity supercycle, and crude oil would participate in that. So that's probably where the short-term bit is coming from, but overall still looks like supply feels a little bit of an outstrip of demand, at least in the very, very short term. And so we'll see if the crude oil rally continues up back through $70 a barrel. Did not do that today.